Thanks for tuning into this earnings interaction with the management of Dalmia Cement. They have come out with numbers which are above most estimates. And that's the key point, that companies in this quarter have not just done well, but have done better than what estimates were. In quarter one, most people did not anticipate the kind of margin control and the expansion in margins and cost control that will come in. This quarter is what it was anticipated, and yet companies were able to do well. Couple that up with maybe a bullish scenario in the second half, and you have a potent combination at hand. But let's get in, Mr. Mahendra Singhi, to talk about how is it that he's seeing the current scenario for his company and for the space at large. Mr. Singhi, good having you. Thanks so much for joining in. Hope all is safe.
Happy morning. Everything is good. Our people are quite comfortable, and we are doing better.
Okay, so put the quarter into perspective. When we spoke at the end of quarter one, you were optimistic, but you had mentioned that the positives might come in the second half. Were you surprised with how the sector has fared in the second quarter itself? And how would you sum up your results?
First, I would say we had great faith in Indian government, Indian economy, and Indian people, and in our own people. And all coupled together, I think we have been able to do quite better in Q2, and Q2 has been quite better than when we compare with YOY, and even also better than what the expectations were. If you find that our volume has grown by 7%, otherwise people were thinking that how much would be the degrowth in comparison to YOY considering COVID-19 situation. But considering somewhat improvement which is coming up in overall cement demand also, but at the same time, our team has been able to do well, and we have clocked 7% growth. Secondly, if you look at the various cost controls which we could implement and get the benefits, so our variable cost has gone down, our fixed cost has gone down, and at the same time, broadly, we have been able to also increase our trade volume, trade percentage. So coupled all together, we could clock the best ever EBITDA figure of 702 crores in Q2. So that's a great satisfaction for all our management and team members. And secondly, I would say that this quarter has been further important on account of one, we completed acquisition of Morley Industries, and now we'll have next year we'll have presence very well in Maharashtra area. Secondly, we would also be ramping up the volume of East, considering our various enhancement in capacity projects which are completing. And another important milestone of Q2 has been that we were able to complete buyback of 66.6 lakh shares, whatever we had decided, and that's a matter of great satisfaction. And thirdly, in H1, we have been able to repay the debt of 750 crore. So now our net debt to EBITDA stands at 0.87. Considering now the overall economy, which may shape up in next 6 months, we see better future. But of course, we have to be quite cautious. We have to be cautiously optimistic, considering the second wave of COVID-19, which may come up, or something else also. But as far as say management is concerned, as far as efforts are concerned, that's are all on to do better.
Yes, you certainly have shown some tremendous cost control. And of course, it's probably industry-wide as well. Mr. Singhi, just a quick question on that. Would any of these costs come back? That is part one of my question in a meaningful way. And what about realizations? Because while they have stayed flat, now that the monsoon season is over and we hear sound bites of how infrastructure and real estate activities have picked up quite substantially, would you believe that realizations can move up from the current levels?
Okay. So one on cost part, I would say that whatever say operating parameters are concerned in terms of say kilns, cement mill outputs, in terms of heat or power consumption, etc., etc. Whatever say improvements we have done, that will stand for it. At the same time, the only negative part which is coming up for all the cement industry also is the increasing prices of coal and petroleum coke. So to some extent, it may impact on our variable cost. At the same time, to combat this impact, we have already taken up various measures, and one of the major is how to use alternate fuel, which we call green fuel. So in last 12 months, our team has done great progress, and in the quarter two, we have been able to replace fossil fuel or the petroleum coke almost by 9%. And we are in the process that it goes up on account of that. One, we'll be able to maintain and manage the cost. And secondly, we will also be able to bring down our carbon footprints. As you know, we are fully committed to manage both profitability and sustainability together. The second question and answer is that now the healthy months are ahead, and there may be betterment in prices, but it is difficult to project that. At the same time, in East, there are some pressures on prices, so it's difficult to project that. But demands when goes up, starting from say mid of November or so, then there may be betterment of prices.
I was of the belief, Mr. Singhi, that if once migrant labor comes back in full swing and activities pick up, there will be a natural upward movement of prices. You don't think that will happen?
That may happen. That may happen, and even when migrant laborers were not there, then also there was price increase. And if last year when everything was normal, then also prices got reduced. So there are different trends in pricing. But what I'm trying to say is that with the better demand, prices may be better.
Okay, so with better demand, prices may be better, and if activities pick up, then even better. The other question, Mr. Singhi, was how does Dalmia Bharat take advantage of higher economic activity? Now you have a fairly large capacity on stream already,
Yes.
but you announced expansion plans. I think the 3 MTPA clinker capacity probably comes on stream, the Murli
Yes.
acquisition, and a few others. Can you give us a sense of how do the next 12 months look for you? 6 months of the current year, 6 months
Yes.
of the next year. What capacities come on stream? What utilizations do you operate at, and how do you take advantage of the same? You can silence your phone, Mr. Singhi, no problem.
Yes.
It will
Yes.
take a minute, but please do it.
Yes. Yes. So point is that yes, our increase in capacity projects are going on. First, I would like to say that our new line at in Odisha that has already been commissioned now. Now commercial production has started from 1st of October, and the new cement mill which would be now commissioned, and its added output would be beneficial to us in the last quarter of this financial year. And in time to come, we'll have also another 2.5 million ton capacity coming up of Cuttack of Odisha, which will happen in say first quarter of next year. And then Murli output may come maybe in the third quarter of next year. So based on that, definitely we will be doing quite better, and I'm sure that all the time we'll be doing better than the industry, and we are expecting some good growth in our volume also, good growth considering the good growth in the demand also.
Yeah, actually, Mr. Singhi, that was going to be my question, just to try and understand that you will naturally see an uptick because of demand, and I presume that capacity utilization levels are nowhere near full. And then you have other capacities in different parts of the country coming in. You also probably announced the intent to diversify geographically as well. So that's my real sense.
Yeah.
What kind of volume growth do you foresee you will see in the next 18 months? One, purely on account of the demand uptick and the current plant's capacity utilization is moving up, and then the newer plants coming on stream and helping you generate more volume. So, what's the overall volume growth trajectory?
Yes. First, let me highlight that whatever say new geography is concerned, that would be taking time, but except in Vidarbha or Maharashtra area, which should come up in third quarter of next year. And at the same time, it all now depends that how South the demand comes up, because the demand of South still is a matter of concern. And still, if we see the first 6 months, we have seen degrowth in South. Now, in the near future, if it comes up, then definitely it can help in further better demand for sector also, and better for the organization also. I'm sure we'll be able to reap benefit of our new capacity, both in terms of last quarter of this year as well as next 9 months also. But
Okay.
I may not be able to give you exact number which you might be liking to have, but then definitely I can say one will be doing better than the industry.
Okay. Now, this is something that you told me the last time as well. So I'm kind of
And whatever we are committing, I would sure that we'll be able to do that, and you will be able to appreciate that also.
no, surely, Mr. Singhi. Let me then just try and juxtapose the whole picture, and I'm trying to understand. Therefore, what does it do to earnings growth? Right? You are expanding capacities, which would require capital. At the same time, you are repaying your debt. This quarter also, I think you paid about 250 crores of debt. And you are saying that you will become net cash by FY23, which means that the deleveraging cycle will continue. And therefore, I'm presuming that you believe internally that over the next 18 to 24 months, you will have very strong free cash generations. So that will not come in unless the work and the results that you will throw up quarter after quarter will be very strong. So put all of this into perspective. The debt reduction that you will do, the kind of capital required for capex, and after all of this capital outlay, the earnings growth picture, which will help you get the cash that you need for both of these activities.
Yes, you are so right in concluding, considering the all parameters, and we are quite sure that the coming 2 quarters of this year as well as the whole year of next year should be better in terms of profitability, in terms of retention of cash, and in terms of repayment of debts also. Now, if we look at next 1 or 1.5 years capex amount also, in totality, it may be around say 1800 or 2000 crore in totality, considering the Morley, the acquisition, implementation of the grinding units, etc., and a few other projects also which we have taken up on account of putting up waste heat recovery plant for improving the overall share of the green power. So based on this, we are quite confident that we'll be able to bring down our net debt to EBITDA ratio also, as well in totality also the debts. And it all now that depends how demand shapes up. But as far as say our individual performance is concerned, we would be doing better.
I'm sure you would be doing better, Mr. Singhi, but maybe you can't give me exact numbers on volumes, capacity, etc. But any flavor of the kind of earnings growth that you believe the company can show?
It will be difficult and may not be prudent to give any type of guidance on these, because one, prices play a very important role and no one can predict, because it all matter of the demand and supply scenario. And at the same time, as far as say cost part is concerned, definitely I can say that cost would be under control and we would be one of the best in the industry. As well, the new initiatives which we will be taking up in regard to whether it's a usage of green fuel or increasing our trade share in totality, etc., that would surely give us better profitability, better margins. And like in this quarter also, we have been able to get operating margin of 29%. So I'm not committing that that may happen, but that yes, we will continue to do our best.
Okay. Last question, Mr. Singhi, and that is something that I asked you the last quarter too, but I just want to rephrase my question, and that is on IEX. Now, it's a very small thing, but companies would make investments into alternates which are not concurrent to the business for various reasons. My question to you is this merely a financial investment, or do you foresee your interest in that becoming higher? Because there are a lot of other smart money managers who are saying that IEX gives a exposure to a very high margin growing power segment for them. Now, what's the sense that you can give us, if you can?
You know that the investment in IX was made maybe 5 6 years back when we were also in power business, and we had one of the subsidiary as a power company. And thereafter, if you look at the benefits which we could get from IEX is, I think, more than 2.5 times. And at the same time, I think what we shared earlier also, that we'll go on exploring the possibilities of whether to divest or not to divest in IEX from time to time. But at the moment, we are remaining invested in IEX, and maybe after some time again the
Sir,
review
you are
would be.
not sir, you are not just remaining invested, you are increasing the stake. So many people wonder as to why is such a smart company like Dalmia Bharat doing this. What could be the rationale that you would have?
uh, I think we have not increased our stake. It's almost same. It just
Okay.
the change in the name of the company because of the demerger, etc. But it's the same. And secondly, also, if you look in totality, the overall the portfolio, you won't find it has major impact.
Of course. Yeah, which
Yes.
is what I started off with. That from your perspective, it's a very small investment, but I was still just wondering as to why. But I didn't quite figure out that it's just a change in name. I thought Dalmia Bharat had increased the stake. Thank you for clarifying that.
Yes.
But Mr. Singhi, keep up the good work. Very strong show in the quarter, and we look forward to understanding more about the cement sector from you at the end of quarter 3. Thank you so much for speaking to us today.
Thanks, and thanks for showing us as a better performing company.
No, no, not at all. You are doing what you are. We are just showing what you are doing. Happy Diwali, Mr. Singhi, and festive greetings for the new year.
Happy Diwali to you also, and happy Diwali to all viewers.
Thank you so much. And viewers, thanks for tuning in to this earnings interaction with Dalmia Bharat.